Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Niraj Shah. Apologies for the small delay that we had today. Technology sometimes plays its tricks, doesn't it? But anyways, let's talk about what happened or what are the cues set like for the day today. So the US markets had a bit of an off day, came down about 1%. The futures too aren't exactly gung-ho really. So you probably don't have the best of global cues for ourselves. And frankly, if you look at the Asian screen as well, so quite unlike Europe, US had a tough day as I showed you, and Asia is having a bit of a mixed day with larger bias towards the downside. So you've got to keep that in mind, that the Asian screen is also looking slightly wobbly, if you will. No alarm bells, but slightly wobbly in the session today. So you've got to keep that at the back of your mind. About 0.5% lower for the Asian screen in the session today. So keep that in mind. Now, what we're seeing across emerging markets, frankly, is rotation. So even if the markets are steady or flat or maybe marginally higher, what is moving up are some of the cyclical names or value names compared to the growth stocks. And in the last 2 or 3 quarters, we've seen this. But just look at this chart and we'll show you the relative change in the emerging market value stocks versus growth stocks. It's the most that the emerging market value stocks have beaten the growth stocks on record, really. And this goes back all the way to 97. That tells you the extent of the bounce back that we've seen in the value names. So if value investing was dead all through and through, somehow it's come back with a bang. Now the SGX Nifty today indicates a start, which is lower in the session. So we'll start off lower. Yes, 13,000 seemed on the cards yesterday. The SGX Nifty, I think, briefly kissed 13,000 as well. But we are pointing towards a start, which is about 1% lower. So maybe not right now. I do think, though, that 13,000 and the Nifty is just a stone's throw away from 13,000, and that's merely a formality. So if it doesn't happen today, it could well happen over the next couple of days, or maybe in the next 1 week. Who knows, really? And this may be the famous last words, but I still do think that 13,000 is a mere formality. The mid-cap index has inched closer to 2-year highs as well, and FIs are on track for the highest ever monthly purchases in Indian equities. Remember, the highest ever FI flows were 33,781 crores in March 2017. Look at the month of November. The total number is northwards of 40,000 crores. So we are well on track. Unless something changes quite dramatically, I doubt that we will not have record FI flows in the month of November. And that tells you a story or two about how these flows are coming in. We were taken to Ridham Desai during Sal Mubarak show in Diwali, and he said that he suspected that these were not ETFs or EM dedicated flows, but India dedicated flows that are coming in, and probably explains the gush of money that is coming in. And remember, as I've always said in the last 2 months, as loose the fundamental correlation may be, and I don't think that's too loose too, but FI flows positive, banking does well. And for now, there is no reason to believe otherwise. Now, the other bit is, what is auto doing? And I just wanted to bring up some data points, because usually we don't focus on particular index like this, but just the nature of the move in autos, which has been breathtaking, really. The index has been up for 12 straight sessions, and major stocks are at 52-week highs. Now, a lot of people have scoffed at auto, saying it's cyclical, pent-up demand, what have you. All of those people have missed out on the auto rally, right? I mean, look at M&M. It gained as much as 10% yesterday. It was the biggest single-day gain since April this year for M&M, and it's trading at the highest level since March 2019, actually. Tata Motors gained as much as 7%. This is Mahindra and Mahindra, and just look at the move yesterday. Tata Motors gained about 7% in trade yesterday. 173 it closed at. It's trading at the highest level since February this year. And statistic, up for the 3rd straight day, up 15% in 3 trading sessions. Similarly for Motherson Sumi, gained about 6%, highest level since February. Or Eicher Motors. Eicher Motors yesterday was up for the 12th straight session. 12 sessions straight for a stock. That is some buying that has emerged. It's the longest winning streak for Eicher Motors since March 2011. Can you beat that? 10 years or 9 years, it's the longest streak for Eicher Motors, and that tells you a story, right? about what's happening to this stock. So autos firmly in the driver's seat, and I won't be surprised if there is more fuel to fire today, even if the markets are cool, because of Hero MotoCorp and what the stock has said. Now, this one is doing something special, really, from amongst all the two-wheeler companies. Look at those numbers. These are staggering. They sold 14 lakh two-wheeler units in the festive season. 14 lakh. It's just astoundingly high compared to Hero's own benchmarks as well. But yeah, it's just a staggeringly high number. The usual used to be 8 lakh or thereabouts, right? The vehicle stock at dealerships has fallen to less than 4 weeks, and the dealers have the lowest ever post-festive inventory. Now, if any of us were doubting about whether this is just pent-up demand or whether this will continue, and a lot of people cited in the month of September that there was pre-booking of the festive season, or October a pre-booking, and therefore will that last? Well, I think Hero's statements tell you something else. It lasted in October in a very good fashion, and boy, has it lasted, or has it outperformed in the festive season. I mean, it's quite stunning, really. So the going is good. This should please people. Now, whether it dies out in December or something, I have no idea. I mean, I don't think anybody has an idea, really. But you take the data as it comes, and right now, don't bet against the data for Hero MotoCorp for sure. I think it's a stock that all of us should be watching out for in the session today. The other one is Wipro. Now, a lot of people are talking about how there is a fair degree of optimism around Wipro because the analyst meet that they organized yesterday was very gung-ho. I read Jeffrey's note, and they maintain, and actually I read a couple of other notes. Say for Edelweiss, most of the others are saying that they want to sit back and see proof of the pudding being in the eating. They want to see Wipro deliver, because Wipro's P multiples imply the highest PEG ratio of 2.1 times. That's pretty high, really. Usually 1 is considered a benchmark, and that is also used if the P multiples fail to justify the analyst buy rating. So therefore they switch to PEG. A PEG of 2.1, which is P to growth ratio, is just astoundingly high. The buyback catalyst, Jeffrey says, is behind us, and the results of the new strategic focus remain to be seen. Phillip Capital has an encore on that Jeffrey's view as well. So be mindful about Wipro. It was a strong stock yesterday, but be mindful of that. Watch out for a couple of other stocks. CLSA has come with a note on Bharat Forge, positive. And I think Economic Times says that Vedanta, the parent company, Vedanta Resources, might launch an offer to hike their stake to 75. They failed to delist, but now they'll launch an offer to hike the stake of Vedanta Resources in Vedanta to above 75%. And that might be positive for Vedanta in the session today, so be mindful of that. It's a very sketchy stock, so please be careful trading it. But as I said, autos remain firmly in focus, Hero MotoCorp more so, but don't ignore the others, and don't bet against the trend. Yes, there's a pullback today, but it's no sign of a continued pullback. The FI flows are strong, so for now, flow with the data. Thanks so much for tuning in to the Trade Setup today. Have a profitable day ahead.